Welcome back to the channel, and thanks for joining me. I'm Algabot, and here we take a close, analytical look at automated trading strategies built for MetaTrader 5. Today we're studying an expert advisor called Efficiency Gated Breakout. It's a channel breakout approach with a clever filter at its heart, the Kaufman Efficiency Ratio, which measures whether a market is genuinely trending or simply churning sideways. Over the next few minutes, we'll explore how it reads the market, how it defines its entries and exits, and how the code itself is put together. Remember, this is educational content only, not financial advice. Let's dive in. So what exactly does the Efficiency Gated Breakout Expert Advisor do? At its core, this is a breakout strategy. It watches a rolling price channel, in the style of a Donchian channel, and it becomes interested when price pushes beyond the highest high or the lowest low of a defined look-back window. On its own, though, a raw breakout can be misleading because ranging and choppy markets produce a constant stream of false breaks. That's the problem this strategy is designed to address. The distinctive feature here is the Kaufman Efficiency Ratio, and that's where the name comes from. The efficiency ratio compares how far price has actually traveled from start to finish against the total distance it covered along the way, including every wiggle. When a market moves cleanly in one direction, that ratio sits close to 1. When price thrashes back and forth going nowhere, the ratio collapses towards 0. By requiring the efficiency ratio to clear a minimum threshold before any breakout is considered, the strategy aims to sit out the noisy, sideways conditions and engage only when a move looks genuinely directional. Two further filters refine each entry. An exponential moving average acts as a trend baseline, so long entries only occur above it, and short entries only occur below it. A relative strength index reading keeps the strategy from chasing a move that has already stretched too far. Finally, the average true range, a measure of recent volatility, is used to size the stop loss, the take profit, and an automatic move to break even. In terms of who this style might interest, it leans toward traders who study trend and breakout behavior and who prefer a rules-based, closed-bar approach. As always, this is shared purely for education and never as a recommendation to trade. Let's walk through the logic step by step, exactly as the code defines it. The expert advisor works only on closed bars. It waits for a fresh bar to open, which tells it the previous bar has fully formed, and only then does it evaluate anything. This avoids reacting to the flicker of a still-moving candle. On each new bar, the strategy first runs its trade management routine and then checks whether it has collected enough history to evaluate every filter. It also allows only one open position at a time under its magic number, so it never stacks trades on top of each other. Next comes the regime gate. The strategy computes the efficiency ratio over its look-back period and compares it to the threshold, which defaults to 0.35. If the ratio is below that level, the market is judged too choppy, and the strategy simply stops there and waits. Nothing else is considered. If the market clears that gate, the strategy builds its breakout channel from the prior bars, deliberately excluding the most recent closed bar so the breakout candle itself doesn't distort the boundary. It records the highest high and the lowest low of that window. Now the entry conditions. For a long, three things must all agree. The last close must be above the channel's highest high, confirming an upward break. That same close must be above the exponential moving average, confirming trend agreement. And the relative strength index must be below its cap, which defaults to 72, so the strategy isn't buying into an already overextended spike. A short is the exact mirror. The close must be below the channel's lowest low, below the moving average, and the relative strength index must be above its mirrored level. When a long is signaled, the entry is taken at the ask. The stop loss is placed 1.5 times the average true range below entry, and the take profit 3 times the average true range above it, giving a 2-to-1 reward to risk shape by default. A short mirrors this around the bid. Finally, trade management. Once price moves one average true range in the trade's favor, the stop is lifted to the entry price, removing the initial risk from that position. Every value here is fully adjustable. Let's look at the actual MetaTrader 5 code driving this, shown here as it appears in the editor. At the top are the input parameters, the dials you can adjust before running the expert advisor. You can see the efficiency ratio period and its threshold of 0.35, the breakout channel period of 20, the 50-period trend moving average, the relative strength index period, and its cap of 72, and the average true range period. Below those sit the multipliers that shape risk, the stop at 1.5 times average true range, the target at 3 times, and the break-even at 1 times, followed by the order volume and the magic number. Now the two signal blocks. The long signal is a single combined condition. It is true when the last close is above the highest high of the channel and above the moving average, and the relative strength index is below the cap. When that condition holds, the code reads the ask price as the entry, sets the stop 1.5 average true ranges below and the target 3 above, and calls trade.buy to open the position. The short signal is the mirror image. It is true when the last close is below the lowest low, below the moving average, and the relative strength index is above the mirrored level. Here the entry is the bid, the stop sits above entry and the target below, and the code calls trade.sell. Notice both sides share the exact same volatility-based stop and target structure, just flipped in direction. Now let's bring it all together on this illustrative chart. Across the price area, you can see the breakout channel, the upper and lower bands tracing the recent highs and lows, with the exponential moving average threading through the middle as our trend baseline. Below the price is a subpanel showing the Kaufman Efficiency Ratio, our regime gate, with its threshold drawn as a dashed line at 0.35. Look at the first several candles on the left. Price is drifting sideways, bumping between the upper and lower bands without committing to a direction. This is exactly the environment the strategy is built to avoid. Notice the efficiency ratio down in the subpanel, sitting low, well beneath the 0.35 gate. Because that ratio is below the threshold, the strategy treats this as choppy, inefficient movement and stands aside. No orders are considered here, no matter how tempting those small pushes look. Then watch the breakout candle. Price surges upward and closes above the upper band for the first time. At that same moment, the efficiency ratio climbs and pushes above its gate, confirming the move is efficient and directional rather than random noise. Price is also sitting above the moving average baseline, and the relative strength index has room below its cap, so it isn't overextended. All the conditions agree, and the buy entry marker appears on that candle. The entry is taken at the ask on the open of the next bar. From there, the stop loss is placed below the entry at 1.5 times the average true range, tucked beneath the breakout, while the take profit sits 3 times the average true range above. Follow the next couple of candles as the move extends. Price presses higher, the channel steps up beneath it, and the trade runs cleanly into the take profit target, where the position closes for a gain in this illustration. Along the way, once price had traveled one average true range in favor, the stop was quietly lifted to break even, so the trade was protected before it ever reached the target. Now the market changes character. After that push, price stalls near the highs and begins to roll over. The next candles turn down, the efficiency ratio dips back under its gate as the top chops around, and the strategy waits patiently rather than guessing at a reversal. Watch the breakdown candle. Price drops and closes below the lower band, breaking the recent support. The efficiency ratio rises back above 0.35, confirming this downside move is efficient too. Price has fallen below the moving average baseline, and the relative strength index is above its mirrored level, showing the down move still has room and isn't already stretched, so a short setup is valid. The sell entry marker appears, and the entry is taken at the bid. This time the structure flips. The stop loss sits above the entry at 1.5 average true ranges, and the take profit is placed the same 3 multiples below. Follow the final candles as price slides lower, stepping down under the falling channel, until it reaches the take profit target and the short closes in this illustration. Again, the break-even logic would have lifted the stop down to the entry once the move had run one average true range in favor. So in a single sequence, you've seen the whole idea. The efficiency ratio keeps the strategy out during the messy, sideways stretch, and then permits a long on an efficient upside break and a short on an efficient downside break, with the average true range shaping every stop and target around it. And that brings us to the end of our look at the Efficiency Gated Breakout Expert Advisor. We've covered how the Kaufman Efficiency Ratio filters out choppy markets, how the breakout channel moving average and relative strength index combine to define an entry, and how the average true range shapes the stop, the target, and the automatic break-even. Everything we discussed today is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this breakdown helpful, please consider liking the video, leaving a comment with the strategy you'd like analyzed next, and subscribing for more MetaTrader 5 strategy studies. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.